My name is Andreas Steno. Welcome to Macro Monday.
Now.
This week, Mikkel Rosenvold, my co-host, welcome to you as well.
Thank you.
You're a partner here at Steno Research.
It's true.
Together with me, running the geopolitical part of the business. We have loads of stuff to discuss today, and we'll try to introduce a slightly new format. So every single week, we'll publish on Mondays, and we'll go through the most important trading topics of last week. We'll look at the funniest soundbite of the week. We'll also look at what's going to happen this week, also from a trading perspective. And then we'll urge you to provide us feedback every week, because we'll have a little laugh around some of the comments that we get. So the feedback of the week before we end up discussing our trading portfolio, Mikkel.
Absolutely.
5 agenda points each week, 5-7 minutes each. Snappy, to the point, relevant, actionable, you name it.
Absolutely. And for those of you tuning in on podcast, we have moved the show to a new YouTube channel. That's why we're talking a little bit about new format and a new system for that. And of course, new name. I mean, if you're watching on YouTube, you must be wondering, why does it say Macro Sunday? Quite frankly, we haven't had time to do a new graphic yet. Our graphics girl is away for her exams. Yeah. But we do have something for you. There you go. Discount code for all our research at stenoresearch.com. You can check in with Monday 30 and get 30% off your first 3 purchases. If you like what you see in here, you can get a lot more of that at stenoresearch.com. More about that later. Yeah. Let's get right on with the 5 topics here. The most important topics of the week. You wrote a headline that surprised me a little bit. Germany's rebounding. What data suggests that?
Everything. So the funny thing here is, I mean, we've been talking about Germany being stuck in the abyss for, 6-7 quarters in a row since the energy crisis hit European shores a few years back. We're starting to see some signs of a pickup in industrial production in Germany for the first time in a long while. And that's quite striking, because it's kind of been the consensus for a while that Germany didn't move anywhere. When we look at growth numbers, it was like, say, close to 0 on the quarter. Nothing happened, basically. But all of a sudden, this landslide that we've seen in electricity prices, nat gas prices, and you name it, related to input costs for manufacturing, all of that suddenly spills over to a much more upbeat sentiment on the future business activity among cyclical companies in Germany. So those with a very energy sensitive business mix, take the example of chemicals, typically very sensitive to the business cycle, very sensitive to energy prices and all that. All of a sudden we get upbeat responses in the IFO survey in Germany from these companies. Germany is no longer a stronghold globally, in my opinion. But for the overall sort of sentiment around asset prices in Europe, it's still relevant to look at Germany. It is still the major backholder in many ways and senses in the European Union. And if we get Germany backfiring on all cylinders, that's probably too much to hope for now. But then we'll actually have a pretty strong picture in Europe, because the southern parts of Europe, they thrive because of, this whole tourism wave. And I mean, it seems like everyone and their mother is still interested in going to Greece or Italy on vacation this summer and all that, right? But signs of improvement from Germany. I'm honestly a little bit puzzled, but it's good news. I mean, we're obviously situated like an hour north of Germany, so maybe we'll even see some positive spillovers here at our little shop, Mikkel.
Absolutely.
Yeah.
Let's hear about that. So you mentioned how energy prices have affected the German economy. One driver of energy prices perhaps in the future is the freight rates.
Yes.
Continue to rise. And you've been looking into the data and ramifications for various commodities.
Yeah. So, Mikkel, I mean, after you've promised us peace in Gaza like 3-4 times this year, I've stopped counting.
Yeah.
We've basically seen a continuation of the no news scenario out of the Red Sea, meaning that we have very few container transits through the Suez Canal. We have very few, if any, transits of LNG ships. So from an energy perspective, this kind of means that for example, the Qataris, big exporters of LNG, they've kind of redirected the flows eastward instead of to Europe, basically because of practicalities, in my opinion. I mean, it's a bit cumbersome to travel south of Africa to bring the LNG to Europe. If you get decent prices relative to European prices by shipping it towards China, India, Pakistan, etc., why not do that instead? At least for the portion of your contracts where you can actually redirect them with a short notice. Point being that the inflow of liquid natural gas or liquefied natural gas, it's such a weird word, right? I don't know whether it even makes sense to talk about liquefied gas.
Not if you ask a physicist, it doesn't make sense. No.
But in any case, that inflow to Europe of LNG is down 35% through May, up until Friday, compared to a year ago. And this is the worst flow picture we've seen on LNG basically since the crisis started. We're starting to see some impacts in the energy price space, again, electricity, nat gas, etc. And if you pair that, and that's the important thing here, if you pair that with a chemical sector in Germany suddenly bidding up the price of energy again because they actually produce more, we're kind of back in a very bullish energy situation price-wise in Europe. It's obviously not good news for the consumer, but I don't know. Remember, the big crisis in Europe actually happened over the summer, not the winter, from a price perspective back in 21, 22. It was basically from June until, say, mid-August, late August. And I kind of fear the same here, given the current supply situation. So on top of that, we have some interesting moves in metals. Copper is on a weak footing. We talked about it last week. It seems like China is hoarding copper, but there's still a big cluster risk in the delivery of copper in July. And to me, they have all the incentives in the world economically to offload copper from China to the rest of the world now. Trafigura is probably on it. The problem is that we can't really see that trend in the inventory data of refined copper in China yet. So it seems like they're playing some sort of political game here, and we'll get back to that whole US-Chinese relationship and also what's happening with TikTok. I think that's very interesting as well, Mikkel. Also seen from your perspective in the political sphere of things here. So what I'm saying here is freight rates are on the up. Goods pricing will be impacted, and we probably have a wave of high energy prices ahead of us in Europe, especially. Yeah. Let's talk crypto.
Absolutely. The SEC is moving ahead with asking issuers to hand in the S1 filings, I think it's called. So basically the next step in the process towards opening up the ETF market.
For the Ethereum.
For the ETF, yes. Exactly, for Ethereum. What are we seeing price-wise on Ethereum?
One thing that strikes me, Mikkel, and I think you actually noticed this as well. As soon as Trump, or we got the information that Trump, basically risks jail or at least a big fine in this hush money case, we actually saw a reaction in Bitcoin especially, but also partially in ETH. So it seems like Trump is now sort of at the forefront of pro-crypto advocacy from a political standpoint. And that's in sharp contrast to what we saw from him when he was in office, basically, Mikkel.
Absolutely. I don't know if he put some money into ETH or Bitcoin. I don't know.
Could be, yeah.
But there seems to be a correlation. Seems perhaps to be the strongest correlation outside of the Truth Social stock, perhaps. This is probably the strongest correlation to Trump's election chances in the market. It seems right now to be the Bitcoin price. So very, very interesting. He's been seen as the main political crypto bro right now.
Yeah. But just to round up on the sort of practicalities around that S1 filing. What we know by the time of recording is that SEC asked the issuers to file them on Friday. Probably means that we can start trading, I don't know, within, say, 3 weeks-ish, would be my guess. So soon, the spot ETF on ETH. Mikkel, the hush money case. I know you've been following it, and outside of the ramifications for the crypto prices, let's also discuss the ramifications for the political outlook and for Trump's election chances. I mean, you've basically been banging the drum that this case could be okay for him in many ways. I mean,
I didn't expect him to get indicted on all charges. I have to admit that, or to be found guilty on all charges. That's very hard. It's over 34. It's pretty hard to spin that as a win. But anyway, so obviously his spinning machine is trying to convey the message that this is a political, this is lawfare, as it's called.
Yeah,
I think they are getting that message across relatively broadly. I mean, of course, the support base of both Biden and Trump, respectively, are going to stick by their guy. In the short term, I think some of the undecided voters may swing a little bit in Biden's favor. We might also get an effect in the polls from Republicans simply not answering the phone. We usually see that whenever there's a a scandal surrounding one of the candidates. Their most ardent supporters usually don't pick up the phone whenever the surveyors call. So I think in the short term we might see a little uptick in Biden's support. In the long term, I think it's a matter of these big narratives. Is this lawfare against Biden? What is it? I'm not sure this is going to hurt Biden, to hurt Trump too bad.
Yeah.
You want to unfuck your shit?
This is live.
Yeah, that's being recorded. Hey, listen, if you want to unfuck your future, then come and join us in the Real Vision community. Incredible platform, amazing content, some of the smartest people in the world, and amazing tools. And guess what? It'll cost you nothing. Come to realvision.com. I'll see you there, and let's help you unfuck your future.
In a minute, we'll play the soundbite of the week. We need our producer Joe to find the soundbite from the Jimmy Kimmel show with one of these fierce supporters of Donald Trump. And I mean, listening to his supporters doesn't seem like they care too much about this hush money case. I would probably personally admit that I also find this to be at least have a political layer. I know you agree with that to a certain extent. So what I'm trying to say here is that I traveled a lot of hedge fund managers lately. Most of them had Donald Trump as their base case from a trading perspective. And my opinion is that you still need to operate with Trump as the base case winner of this election in your portfolio.
Absolutely.
Of course, with ramifications for energy stocks. I think it's bad news for energy, to be honest, because he will allow for a greater drilling pace and all that. So energy prices will likely drop.
Yeah.
Or at least over time. While you typically see that energy inflation when you have Democrats and leftists in power trying to sort of constrain the amount of supply. So let's see. But if Joe is ready, we'll have to play the soundbite from the Jimmy Kimmel show because here's one of Donald Trump's fierce supporters, and he is indeed very, very fiercely supporting Trump.
Why are you here today?
We're here to support the real president, Donald Trump.
It's not that we think Trump is innocent, it's that we don't care.
We don't care.
It's not that we think he's not.
It's very telling.
He's innocent. We just don't care. I love that quote.
Yeah, obviously, but I mean the point of this is that many people, I mean, take a look at this case and decide that it doesn't matter for their decision on who's going to be president.
Yes.
This is a case of bookkeeping. This is, in the views of many in the American electorate, a minor case, definitely. And that's the story that Trump is trying to sell as well. So yeah, great soundbite. Let's look a little bit at the week ahead, Andreas.
Yes.
We have an ECB meeting. Should we start there?
Yes, let's do that.
Yeah. What's the expectations?
We'll get an interest rate cut from one of the big central banks.
Wow.
I think I can promise that, at least based on the opinions stated in the media outlets, etc., from the members, that's pretty much a done deal. The big question is whether they will cut interest rates and then regret right now, and because obviously you see the inflation pressures rising to a certain extent in the U.S. again. You see very sticky wage inflation in the UK. So some of the economies that they will typically compare themselves with, right? But they've pre-promised this cut, so they'll deliver it. The question is whether they'll do a lot more from here. At least they'll probably take a pause. And interestingly, this week with the great numbers from the IFO survey in Germany, with slightly harder than expected inflation from Germany and elsewhere in the Eurozone, which we had spot on in our nowcasting, we're starting to see the signs of sort of a repricing of euro rates towards levels where we've seen dollar rates trade relative to the Fed outlook, if you know what I mean. So the price expectations for ECB cuts have waned, and it seems like this whole interest rate cutting cycle is sort of collapsing almost across the big economies. I'm pretty sure that we won't get higher rates in China anytime soon, because they're still dealing with this major overhang from real estate prices that were way too high compared to the size of their population and all that. So Asian rates will likely stay low, but in G3 countries, if we can name them that, so the Eurozone, the UK and the US, I think interest rates are still on the rise, at least in market terms.
So one cut and chill
cut
for
and chill,
ECB?
yeah.
Absolutely.
Mikkel, speaking of Asian rates and TikTok and the US-Chinese relationship and all that, I think it was Reuters that reported that TikTok is now sort of working on a US algorithm, trying to sort of decouple the content that you're basically seeing in the US version of the app from what you see in China. Two elements related to that, and I'd like to get your take on it. It seems like TikTok has been on the forefront of trying to impact the global sentiment on Israel-Gaza. That's one thing. The second thing is, of course, whether Chinese authorities can use this data from the US to anything for anything.
Exactly.
Right?
Exactly.
So what's your take on these things and the developments we see with TikTok?
I mean, this is pretty much what the U.S. authorities ask for. I mean, it's to create a U.S. version of TikTok. The big question is, as you say, where does the data go? Does the data still flow back to China? Then we're left with the same issues. And secondarily, will this app clamp out anything to do with Tiananmen Square, criticism of China, and also current world events? I'm sure a lot of testing will be done on that, and that is going to be the big question. There's no doubt that the market is there. TikTok is still huge in Europe as well. We are expecting some action on that from the European Parliament after the election in a couple of weeks, or next week actually. I mean, this is pretty much what the U.S. authorities ask for. The problem is it going to have the end result that they hope for, which is a U.S.-based TikTok app that doesn't let data flow into China. And I think the U.S. authorities are going to be really vigilant about keeping tabs on that.
It brings me to the feedback of the week, Mikkel.
Yeah,
and it's a piece of feedback I received on an article I wrote about China.
From Cookie Monster?
From Cookie Monster on Twitter. I keep calling it Twitter X.
Yeah.
Did you see Elon? He's asking for feedback on whether you use the name Twitter or X weekly now on the platform. And I keep saying to him, I say Twitter.
I get an email every week from Twitter ads. We use Twitter to market our platform. It's still called Twitter ads. Every invoice I get is still called Twitter. So they'll have to fix that before I start calling it X naturally.
Fair enough. The feedback goes as follows. I don't remember which book I read, but this sentence stuck me. China will be Japan on steroids. And I think I wrote an article on the sort of medium-term consequences of this real estate bubble. It is a bubble. I think that's fair to say. And the month-on-month declines in the housing prices right now is out of the ordinary compared to what we've seen over the past decade or two in China. So even with these initiatives they've made, we discussed them last week on the show as well. I don't think we have a floor under the prices yet. We've obviously also seen a weakening of the trends in the Hang Seng and the markets surrounding China. Probably because we have to focus back on this real estate trouble and basically an unsolved matter, an unsolved issue, right? I kind of like this analogy between Japan and China. I'm not sure it will be on steroids, as the Cookie Monster on Twitter suggests. But if you look at the demographic development in Japan from, say, the early 90s until now, and compare that to what you should expect from China over the next 3 decades, at least if they continue to dislike immigration. It feels kind of reminiscent of Japan, right?
Some similarities,
Meaning that rates will stay at zero, or they will go to zero also, and probably on mortgages and stuff like that, more or less, because they'll have to. The Chinese yuan will likely have to be devalued at some point. We've been banging the drum on that for a few weeks and still no luck. But the dollar is still gaining versus the Chinese currency, but just it's a kind of slow bleeding exercise. It's not one go. And then obviously what happens once or if we stop trading with China. And I mean, you're an avid follower or an avid reader around the old Soviet Union and that relationship with the US. If we go down that route, we're basically back to sort of that dual setup with no trade between the two superpowers on Earth, right? We're far from that scenario, but
we're very far. And that is the main difference from the situation now to the Cold War, because of the Cold War, you also had two competing poles of geopolitics. But back then they weren't trading almost, ever since the end of World War II almost. The US and China luckily trades a lot today, and that is mainly what's, in my opinion, keeping China away from more adventurism against Taiwan and other areas. Because basically right now, the way I see it, we're dependent on China to produce almost everything we use, but China is depending on us to get rid of everything they produce that we can use. I mean, they need our markets in the West, both Europe and the US. Their own consumer class isn't strong enough to sustain their manufacturing sector. That might not be the case 20 years from now. And that's relevant when we talk about Taiwan, because China held a lot of naval drills around Taiwan this week. I wrote about it in my weekly Great Game editorial. China's not going to attack Taiwan anytime soon, I think. They will probably try something, as I've mentioned before 2049, which is the 100th anniversary of the People's Republic. At some point in that time frame, they will attempt something. But the closer we get to 2049, most likely the less trade, the less interdependency they will have with the West, which makes the costs, all else being equal, less for invading Taiwan, basically. So in the grand scheme of things, I know it's easy to make 25-year predictions. Yeah. That's usually not what we do, but it's just to get sort of a frame of the understanding and the time frame that the Chinese strategic thinking is employing.
So my manuscript says topics for the week ahead here, Mikkel, and you brought up a topic for the centuries ahead here.
3 decades ahead. Absolutely.
Joking aside, Mikkel, one thing that is very important for the week ahead, also in relation to this question on the dollar versus the Chinese yuan, is that we have a very murky liquidity outlook. And that's one of the things that we produce week in and week out on a daily basis. Actually, we now cast the liquidity developments in dollars. We also forecast the future developments. And currently, the net issuance of T-bills is low. So they've moved the net issuance towards coupons. That's an issue from a liquidity perspective, because when they issue new T-bills on a net basis in the US, they tap that overnight reverse repo facility at the Federal Reserve, basically withdrawing liquidity from the Fed and adding it to the system, to you and I, to the banking system, right? And that trend will last at least until, say, 15th, 16th of June. We know that the US Treasury has written about a strategy where they will re-increase the net issuance of T-bills from July, but that's basically a third quarter discussion. We saw towards the end of the last week some pretty volatile trading in tech, also to a certain extent in Bitcoin, and we know how correlated it is to this liquidity outlook. And speaking of trading it, maybe we should end the discussion on our trading portfolio, Mikkel.
Can I get in with one point?
Yeah.
One thing to look out for geopolitically over the next 1 to 2 weeks, the election in Mexico, the expected election of Claudia Sheinbaum as the new president of Mexico. She is expected to alter the course a little bit. The previous president, Obrador, has been very much China-focused, opened the country up from investment from China. Will we see some signs or some statements or perhaps even a state visit to Washington from Sheinbaum in her first weeks and months? That would be a great signal that she's opening up for more investment from the US and sort of pivoting Mexico a little bit that way. That is very, very crucial for the US-China relations as well. There's probably not one third-party country that is as crucial as Mexico is. That's a little bit tough, but it's up there. So keep a close eye on that.
Yeah.
Back to the
good
portfolio.
idea. And I mean, the Mexican peso has been sort of a consensus trade for a while. We'll update you next week on whether we think it will continue to be a good carry trade.
Yeah.
We've traded it a few times over the past couple of years with tremendous returns. So it's certainly one that's on our radar. We don't have it in our portfolio right now. And Mikkel, we've added a few shorts in the commodity space, both to reflect this liquidity outlook over the next 2-3 weeks. I mean, just in full transparency, we're pretty short term in our thinking when we trade. That's why we see ourselves as sort of a complementary discussion to rouse more strategic secular thinking. When we look at the commodity market right now, we have a pretty decent cluster risk in the July contract in copper and also in silver. So we've added those two on the short side, while we've traded it against a few energy contracts, for example, the July delivery of European natural gas. So we're betting on energy versus metals here. Very strategic trades related to these cluster risks, but it also relates to this liquidity outlook, which looks to put a sort of a dampener on trends in Asia short term. And on top of that, I mean, I'm not adding to crypto risk, to tech risk right here, right now. We've basically removed a few trips from the table due to this liquidity outlook, also due to the reaction we got from the Trump case. And probably from mid-June and onwards, we'll keep you posted week in and week out here. We'll try and add some more risk to the portfolio again, given that the liquidity tide turns again, given that we're potentially off the worst consequences for the opinion polling for Donald Trump of this and so on and so forth. So we're basically de-risking a little bit. And this whole reflation story of a larger bit for like real world assets, commodities in the West and partially in China and that region as well, we've basically put that on pause a little bit. Let me put it like that. There are some worrying signs from the consumer. We're also watching that daily with our consumption and congestion-based indicators. But for now, I think reflation will return, but in a few weeks.
Interesting. I think that's all we had, Andreas.
Yeah.
Welcome to this new channel that we're sending on. We're very happy to be here, and please give us your feedback, questions. We'll check it into the show next week. Next week, I think we'll be looking a little bit at our monthly regime, perhaps.
Yes, sure.
Little teaser for that. You'll get even more insights into our strategic thinking and modeling here at Steno Research. For now, thanks you all for watching or listening. We'll be back next Monday.
We hope you enjoyed the video. At Real Vision, we help you understand the complex world of finance, business, and the global economy with in-depth analysis from real experts. Join the revolution at realvision.com.